Has Bitcoin and crypto hit market bottom? In this video, perhaps the biggest too big to fail bank has found that indeed Bitcoin has hit the dip of dips. Dimon's JP Morgan Chase released a research study earlier this week finding that Bitcoin was trading at 28% below its fair market value, implying that there is potential upside from here after a dramatic market sell-off. That's why the bank has now currently replaced its preferred alternative asset, which is real estate, with crypto. If you don't know what an alternative asset is basically an investment that does not fall under the category of typical investments such as stocks and bonds. The bank is sticking to its target price of $38,000, which is 28% above the $29,722 mark at which it was trading when the bank released the note earlier this week. Cross-asset research analyst Nicolaos Panigirtsoglou, I hope that I'm pronouncing that correctly, stated in the report that the recent market correction looks more like capitulation relative to January and February. Thus, the bank sees upside for crypto markets and Bitcoin from here. Just in case you don't know what capitulation is, you may start to see it and hear about it when you watch videos and you read content in regards to something that's making sense of current market conditions, of the downtrend. Capitulation, simply put, is panic selling. So when many investors start to get scared after a downturn in price of a security, they start to sell it off. That leads to a sharp decline in the price. Then risk-tolerant buyers replace risk-averse sellers, and the price starts to rebound amid high trading volume, increasing inflation and interest rates. The war on Ukraine and the slowdown in China have all encouraged investors to ditch assets that they deem too risky, such as cryptocurrencies. In 2022, Bitcoin has taken a nosedive of 37%, while ETH has tumbled a staggering 48%. The market capitalization of all cryptocurrencies combined dropped from $3 trillion in November of 2021 to $1.8 trillion in May of 2022. Therefore, the bank sees that cryptocurrencies have been hurt more than other alternative assets such as private debt, private equity, and real estate. Thus, they see more room for rebound in that space. And this is from a bank whose chief said, and I quote, "I personally think that Bitcoin is worthless," Dimon said. "Our clients are adults, they disagree. That's what makes markets. So if they want to have access to buy yourself Bitcoin, we can't custody it, but we can give them legitimate, as clean as possible access." On Wednesday, November 4th, 2015, JP Morgan Chase chief Dimon said, speaking on a panel at the Fortune Global Forum, referring to Bitcoin, and I quote, "It's just not gonna happen. I mean, you're wasting your time. When the DOJ calls someone up and says that's an illegal currency and it's against the law of the United States of the land, if you do it again, we'll put you in jail. It's over. There's no issue. There will be, this is my personal opinion, there will be no real non-controlled currency in the world. There's no government that's going to put up with it for long. It's kind of cute now. You know, a lot of senators in Congress would say, I support Silicon Valley innovation. There will be no currency that gets around government control. The technology will be used. It may even be used to transport currency, but it will be US dollars." When asked whether digital currency will be stopped, Mr. Dimon said, "Yes, a virtual currency where it's called a Bitcoin as opposed to a US dollar. These things may be very well for cheap transfers of money. Listen, not everybody has the oracle's eyes with the skills to code cookies that'll program you into becoming our next savior, or a DeLorean time machine powered by decomposing banana peels, rat-bitten apples, and blunt roaches. I can feel it." The investment bank's research team, led by Mr. Panigirtsoglou, wrote that Bitcoin may end up becoming an alternative currency, similar to that of gold, a store of value. The paper reads that after the Lehman crisis, the role of an alternative currency was played by gold. However, after the virus crisis, the role of an alternative currency has been played by Bitcoin and gold. JP Morgan was able to see that Bitcoin endured the long winter of 2018 when prices dropped by 70%. Therefore, this increased the confidence of institutional investors to see the potential for markets for digital assets such as Bitcoin and other cryptocurrencies. JP Morgan added that the market cap of Bitcoin may equalize to that of gold. Nonetheless, because volatility is so critical when it comes to institutional investments, risk management, it won't be likely that the market cap of Bitcoin held by institutions will reach the level of gold unless that volatility subsides. Nonetheless, for all you Bitcoin bulls, take a look at this chart that JP Morgan released this week, which measures the volatility ratio of gold and Bitcoin. Take a look at the 3-month mark and 6-month mark. And as you see, the volatility ratio evolving closer to the present day, the trading is very tight with gold. It gets closer and closer with gold. So it may indeed become that global store of value that people are seeking when they invest in Bitcoin. The entire mission of the Bitcoin people fulfilled and coming to life. As you very well know, Bitcoin is never short of detractors. For instance, economist Neal Rubini, NYU professor, otherwise known as Dr. Doom because of his pessimistic views, has declared that Bitcoin is the mother of all bubbles. It is the most overhyped and least useful technologies in human history, according to Professor Rubini, and that since the asset is backed by nothing, it represents pure market speculation. Oddly enough, which is probably why he is making these statements, Professor Rubini is developing his own cryptocurrency, the United Sovereign Governance Gold Optimized Dollar, or USG. And he claims that it is a tokenized replacement of the dollar. Professor Rubini has teamed up with Atlas Capital Team LP, based out of Dubai, an organization which he founded 2 years ago to develop what he declares to be a more robust global store of value. Just like Bitcoiners, Professor Rubini contends that the United States government is printing too much money, which will ultimately lead to currency devaluation. As a result, there is a need for something akin to a substitute to treasuries. However, Professor Rubini's token will be backed by real estate holdings, gold, and U.S. government bonds. Now, Professor Rubini is arguing that Bitcoin is backed by nothing but market speculation. However, the United States dollar is backed by trust in the biggest entity on the planet. So on the one hand, you have a currency backed by your trust in the global superpower, the most powerful country to be governed on the face of the planet Earth. And on the other hand, you have a digital currency backed by your trust in a community that has made a financial impact unlike any movement in the history of man and woman. Why not enjoy the benefits of both? Can't we just all get along? Whether Dr. Doom's digital currency eventually attracts critical mass and takes out Bitcoin as the digital global store of value is up for debate. Professor, please, you are wildin'. Dr. Doom 730, kid. On another video, regardless of what, you can now clearly see that both institutions and economists are changing their views on the potential of digital assets, which may speed up adoption. However, there's still financial experts that contend that crypto markets still have a long way to drop. For instance, Jay Hatfield, Chief Investment Officer of Infrastructure Capital Management, told Fortune that crypto promoters may have to face regulators sooner rather than later, and this may lead to a downturn of the whole industry. Article 1 of the Constitution bars the creation of competitive currencies, according to Mr. Hatfield. Therefore, crypto tokens may be regulated as unregistered securities, leading to substantial liabilities for crypto promoters. In fact, according to Mr. Hatfield, just this week, EU securities regulators called for finalizing investment protection regulation rapidly. Mr. Hatfield expects Bitcoin to trade below $20,000 this year. This is the same guy that said last month that the Fed, staffed with Democrats, would be dovish through the second half of the year, while policymakers after this month's meeting raised the short-term benchmark rate by a half point, double the usual hike. Well, we're still in May, so we have to see how the rest of his projection pans out. His firm is also counting on the housing market to keep the United States economy out of recession, and you see where that's going. The supply of homes for sale jumped 9% last week compared with the same week 1 year ago, according to Realtor.com. Real estate brokerage Redfin also reported that new listings rose nearly twice as fast in the 4 weeks ended May 15th as they did during the same period a year ago. Pending home sales, a measure of signed contracts on existing homes, dropped nearly 4% in April, month to month, and we're down just over 9% from April 2021, according to the National Association of Realtors. The following chart released by the St. Louis Fed shows that the supply of new houses for sale jumped from 4.7 months of inventory in April of 2021 to 9 months of inventory at the end of April 2022. If your housing play doesn't play, Jay, I don't know what to say, Jay. In regards to Bitcoin, nonetheless, JP Morgan Chase, the biggest bank on the planet, is blowing another tune. We thus replace real estate with digital assets as our preferred alternative asset class, along with hedge funds. The investment bank's analyst went on to write that the Terra USD and Luna crash scared off some crypto investors. Nonetheless, venture capital keeps pumping money into crypto.